Hi, welcome to my channel where we provide an alternative view to the common narrative. Today I'm going to talk a little bit more about the banking collapse, especially Credit Suisse in Switzerland, because some more information has come available and well, the information is fascinating. So if you are interested, please continue watching. Welcome back to the channel. As I've stated, today I'm going to talk a little bit more about the Credit Suisse banking crisis in Switzerland. And several articles were basically published, and the one is from Bloomberg. And it presents some figures and so on and amounts that are quite fascinating to hear. So I would like to share it with you, if that's the right word. Well, unfortunately, I'm bad, I've said many times, I'm bad with dates, I'm bad with numbers, and I'm bad with names. So some of the stuff I'm going to read off because otherwise I'm going to get it wrong. In any case, information for me is a little bit, I would say, confusing because the one article says so and the other article says a little bit more severe. So I'm not totally sure if the numbers are totally correct. My initial, the latest one is from Bloomberg, and they list a number of amounts, but that differs a little bit of what the first amount of numbers that I heard when the banking crisis started. So I'm going to be a little bit cautious about believing all the numbers. But effectively, according to Bloomberg's article, the Swiss taxpayers is gonna, this whole bailout of Credit Suisse by the Swiss government is going to cost the taxpayer, each taxpayer in Switzerland, about $13,500. That is a fairly huge amount. So how does that basically happen? Is this first off, the Swiss government has pledged to absorb about 9 billion Swiss francs. Okay, that is $9.7 billion. So I know the Swiss is a little bit stronger, but to keep it simple, it's more or less the same. The numbers are so huge, it doesn't really make a difference. But in any case, so they're going to take up the bad assets from Credit Suisse, and that's going to cost them $9 billion or $9.7 billion. And then they're going to provide liquidity to UBS, who's taking over or absorbing Credit Suisse as a means of financing future liabilities. That means if more investors try to withdraw their money from Credit Suisse and UBS doesn't have the necessary funds available, it doesn't need to sell their bonds at a loss or their investments, they can borrow up to $100 billion from the Swiss National Bank. In any case, here's where it becomes a little bit funny. The deal also mentions a separate guarantee of 100 billion francs from the Swiss Central Bank that isn't backed by the government. I'm not sure where this 100 billion comes from. Adding the 50 billion franc loan from the Swiss National Bank, which the bank secured last week, the total sum of the rescue will top 260 billion francs. That means $280 billion. And this is apparently equivalent to 1/3 of Switzerland's entire economic output for 2022. That is 1/3 of Switzerland's GDP. That is basically what the Swiss government, according to this Bloomberg article, is going to invest in Credit Suisse and UBS in order to stop the collapse or the risk or the run on the banks or protect the financial system of Switzerland. Now, we all know Switzerland has always been a neutral country and investment banking hub in Europe, and the credibility of the banking system was always high, and the Swiss would actually like to continue with this image because it's important for their banking system and the economy. But as we'll later discuss on, that's not going to happen. This banking crisis has a really bad influence and on the reputation of Switzerland's banking system. Well, and then it comes actually funny out, and then this article talks about that UBS in 2008 financial crisis was bailed out by the Swiss National Bank for 60 billion francs. So basically what you had is that in 2008, UBS was in a bad position and was bailed out by the Swedish government, and then it recovered. And I read an article about that, about it didn't cost, at the end of the day, it was a good deal, and the Swiss bank didn't make a lot of losses. Actually, it cost taxpayer nothing. They actually got a profit, but that actually seldom happens. So the Swiss taxpayer was clearly lucky in that respect. But now you have the same bank that made bad investments in 2000 or before 2008, got into trouble with the financial crisis, was bailed out, and now that same bank is used to absorb its competition, who's now in a very bad position, who is now being bailed out by the Swiss government. So what you actually have is that you have actually the two biggest banks in Switzerland experiencing both financial crises in a very short period. So I thought it was funny. But in any case, so let's progress. Excuse me. Then we have a little bit more information in a different article by CNN. It says basically the last minute rescue of Credit Suisse may have prevented the current banking crisis from exploding, but it's a raw deal for Switzerland. It's not good for Switzerland itself. It leaves basically with the absorption by UBS of Credit Suisse, leaves Switzerland exposed to a single massive financial institution. Just remember, those were the two biggest banks. Now there is one bank, and that bank is significant, large. It's the biggest player basically in Switzerland. And here comes some data. Problem is, as a professor of finance at the Swiss Business School said, is that banking mergers seldom work. So they are seldom good for the country. So he doesn't believe that the banking merger of Credit Suisse and UBS is a good thing and will lead to much more bigger problems down the line. Well, it also says that it will lead to huge job losses in Switzerland because some of the functions or of the two banks are duplicate. In fact, the one guy says that in his street, the Credit Suisse bank and the UBS bank are right across the street from each other. So one of those branches have to close. It poses about 5% of the national workforce, the financial sector. And that's about 212,000 people. But that's not controlled. The two banks, more or less understand, employ about 37,000 employees. But people working in the banking sector, that's more than 212,000 people, and that's a huge amount. And if the Switzerland banking system gets a bad reputation, which is going to get, or already has, that's not going to be a very good thing. Okay, in this case again, and I will read it now because this is where the numbers differ, not much. It says taxpayers are now on the book for up to $9.7 billion of future potential losses at UPS, arising from certain Credit Suisse assets, provided those losses exceed 5 billion francs. The state has also explicitly guaranteed a 100 billion Swiss franc lifeline to UBS should it need it, although that would be repayable. And this is where it basically stops. So, and this is also the numbers that I firstly heard about. So in my opinion, this is what the deal was. But apparently, either I am wrong or either the article from Bloomberg was wrong. But they say that it's much more higher, the impact. And what it basically will do again, these two banks merging, it will create a super mega bank, which increase the risk to the country. You can't have such a big bank in such a small country and then think it's good for you. Also, like it says here, the collapse has also tainted Switzerland's reputation as a safe and stable global financial center, particularly after the government effectively stripped shareholders of their voting rights. Just remember, the problem arose, the government reacted, the government said this was going to happen, and that is, and it executed those things. It told UBS to take over Credit Suisse. It told them they must pay that one price, how they should finance us, how much losses they would take, without consulting the shareholders of either Credit Suisse or the shareholders of UBS Bank. And the Swiss authorities also wiped out some bondholders ahead of the shareholders, upending the traditional hierarchy of losses in a bank failure, dealing another blow to the country's reputation among investors. And we are referring here to the AN1 bond. The AN1 bond were bonds that were issued to investors, and those were now sort of cancelled. I think it was $27 billion. So that $27 billion is gone. That's it. People lost it, the investors, which is not how it should happen. There is a hierarchy that basically losses are distributed in the banking system. First, the bondholders are compensated, then the shareholders are compensated, and only then are the creditors compensated, of which of the creditors' amount are sometimes insured against these losses. Just remember, the instant you deposit your money into that bank account, that money is not yours anymore. You have effectively given the bank a loan, and it can do with a loan whatever it wants within the legal framework of the banking system and banking laws in your country. That is how it's supposed to work. So if you loan it to them, then you are the last person that will basically be repaid. So never forget that. Your money, once deposited, is not your money anymore. In any case, the fact that the losses or the bondholders were firstly sacrificed instead of the shareholders, that has a repercussion for Switzerland's credibility. And the reputation of Switzerland has been damaged forever, according to Briss of IMD. In any case. And here we have the basic numbers again, too big to fail. This new banking system will have roughly about $1.7 trillion in combined assets, which is about double the size of Switzerland's annual economic output. So the money that this new bank, this UBS new bank is going to control is 1.7 trillion, which is double the GDP of Switzerland. And in the problem with having a single bank in a small economy, as I said, that if it faces bank runs like Credit Suisse has now happened, and it needs a bailout, which UBS has needed in 2008, the government's financial firepower may be insufficient. Basically, the government cannot fund it because it's twice this GDP. How are you bank going to finance it? The local deposits in the bank is 333 billion or $360 billion, which is equal to about 45% of the GDP. So how are you going to guarantee that? Even if the country is healthy and has a very low debt level, it's impossible. So this banking crisis, or the actions of the Swiss government, number one, it has loaded the Swiss taxpayer with about, say, $14,000, each one of them. It has created a mega bank that controls assets to about double the yearly GDP. The amount of cash deposits of Swedish gas deposits, which are supposed to be guaranteed, is about 45% of the GDP, which is much more what the country can even afford to do in a time of crisis. So what they have created this big behemoth of a bank, big to fail, that will be a huge stone around their neck in the future. Yeah, I think that's any case. Apart from that, it says that this merger will have an adverse effect, like I said, on job retention and competition. And it's likely that about 9,000 jobs will be cut from Credit Suisse. And this is why it actually said that in a call with Analysis Sunday night, UBS CEO Ralph Hamers said the bank would try to remove $8 billion or say $9 billion of cost a year by 2027, of which $6 billion or $6.5 billion, which will come from reducing staff numbers. So $9 billion is going to be cost reduction, and about $6.5 billion will be in reduction of personnel, which means jobs. And that is a fair amount. So they're going to save money by firing people. And that is expected to be about 9,000 people. But it also says that not only does the deal done in a hurry fail to protect jobs in Switzerland, but it contains no special provision on competition issues. So UBS is now basically a quasi-monopoly power, which could increase in the banking cost of services in the country. Because it's too big. I think it now becomes like 30% or so of the banking sector. And here's another interesting fact, is that, just remember, UBS had to issue shares to the value of $3.25 billion to buy Credit Suisse. But this $3.25 billion, UBS got Credit Suisse at 40% basically of what the company was worth at 2 days before it was closed. So this is actually an incredible deal. So you pay 40% of another company. All the bad debt is removed, so you have no risk. That is now controlled by the shareholders. And if I am in trouble, I get 100 billion or more in reserves funding from the National Bank of Switzerland. That's nice. I mean, think about this. You buy another company, you buy your competitor at 40% of the price, the value. You buy good asset at 40% of its value. You get rid of all the bad stuff. There is very little risk for you. And if you are in trouble, then a loan is already there for you just to use. I mean, basically, usually the loan is the biggest problem, that should you be in trouble. And it's not that UBS has a reputation for not being troubled because in 2008 it needed a bailout. Well, it says just in the site, the transaction is expected to close in the coming months, but full integration of two institutions will take 3 to 5 years. There's a huge amount of integration risk. So again, it doesn't mean that this merger is going to be successful. In the future, it might even lead to bigger problems to the Swiss government and the Swiss National Bank. And what then? So they create that. This is a huge risk that the Swiss bank has done. And it has done also huge damage to their credibility. And it was done in haste without considering all the factors. I think this has a huge impact on the Swiss banking systems in terms of credibility and support or future business, if you want to call it like that. Well, I wanted to talk about UBS's basically financial bailout, but it's not really that relevant to today's video of Credit Suisse. All I can tell you, just to sum it up, they got about $60 billion from the Switzerland National Bank to bail them out. At that stage, it made some bad investments in when the 2008 housing bubble was created and where it crashed, and most of the biggest institutions basically were bailed out by America and by each country in order to prevent a collapse of the various banking systems in the various countries. So basically, it also made bad decisions, bad investments, just like Credit Suisse. So the question is, what prevents him to do it in the future? Who says that this deal is really sound? Who says basically that this is going to work? There's no guarantee, basically, what I understand. And if it doesn't work, then it's going to be the end of Switzerland as a whole. Because they have created such a big stone that if they have to feel the weight or something goes wrong, then that one will definitely sink them in the water and kill them. And for me, that is a very, very dangerous prospect. And absolute incredible high risk. I can't believe that the Switzerland government or national bank has opted for such a decision. But I'm not living there. It's probably will have an effect for me here in South Africa and wherever you are. But let's see what's happening. In any case, the UBS one, they did recover their losses. At the end of the day, the Switzerland government didn't make any loss on the transaction. All the bad assets were got rid of at a good price. So they made enough profit, and so they recovered their money. But I believe that is the odd situation where this happens. If I listen to any other banks and so on and failures, they always turn bad at the end of the day. So I don't think that this one will be good for Switzerland as well. So that was my story. Anyways, that's the story for today. The usual rhyme, subscribe, tell your friends, and until next time then, cheers.